Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles, Twitter feed, LinkedIn, anything else you can find out there. Lots of stuff going on in the social media world, but I'm back from Chicago. I was out doing the Traders Expo yesterday, and that was a pretty big show there. Lots of things going on. It was quite an interesting venue. One of the presentations was about penny stocks, and somebody who jumps in on these stocks that they know the company will be bankrupt in years. Doesn't matter if they get a volume breakout, they buy it and trade it. And I must admit, I learned that there are people with a lot more confidence in trading that kind of stuff than I could ever have. But I presented just kind of keeping your slides clean. Ralph Ekampora led it off on Monday. He was the keynote speaker and talked for 3 hours what basic technical analysis is and why you need it. And I followed up or added on, I guess, and pointed out 2 indicators that I thought people could use to help make their charts a little better. And I'm going to briefly show you that presentation today. So I'm going to go at a little higher clip because a lot of you are familiar with the website. But I do want to show one thing from today, and that's the FANG chart that I've set up. I've shown it roughly once every 3 or 4 months, and just to show everybody kind of what we're looking for and what we need to start to see here out of this earnings period, because Microsoft has already reported, and as these FANG names report, we need to be watching the price action. And so far, we haven't had any sort of compelling move out of the range. So that's what today looks like. It might actually start doing that. We'll see. The breadth is still looking good. So everything from that perspective is great. Okay. I want to briefly hit this FANG chart. So what I've done here is I've just put all of these together, and maybe I should turn on my arrow so you can see that. All of these things are together, and I've got Amazon up here, and you can see that Amazon's price high back here, September 1st of 2018 was 2050. The high just before everything sold off was 2033. We got up to 2035 the other day, so haven't taken out new all-time highs, but very close to it. And so right now we're sitting at about 1980, which is just 1 percentage point off, or 2 percentage points off the top or something like that. So nothing major, but that's where we're watching for. What happens to Amazon? Can it finally start to break out here? We have Apple well off its peak from last year. And again, Apple kind of made its peak October 2nd. I think their earnings were right at the end of the month, if I'm not mistaken. No, their earnings would have been end of October. So anyway, we're trying to get through 210 here, which is the prior high back in April. Facebook, we're sitting right up here, and we've got this, super blow off high. We had 2 gap ups on those days, and then a huge gap down. And now we've been basically going back and backfilling this gap. And we've been working on that for almost 2 weeks here, trying to make a little bit a move above this 200 level that we tried to move above. Now, haven't really got anywhere on that, so we want to keep watching. Here's Google. Same thing, double top action on it. And Google's been meandering at best since April and just slowly working its way higher. Looking at Netflix down here, obviously we know that they reported a drop in subscribers after raising their price, and the chart gapped down, and now it's looking to try and find support around 300. Microsoft continues to be the powerhouse. Satya Nadella, I'm a big fan of what he's doing there. He is unbelievable. This is up at $140, and you can see stock, even that May pullback, almost unrecognizable on the chart, and got up to 140. And then we have Adobe down here, just hovering around this 310. And I realize it's not part of FANG, but it's been one of the big, strong stocks in tech, a smaller company, but a big, strong price mover for years. And it's continuing to hover sideways. So this is sideways, sideways, down. I'd say sideways, sideways, sideways to up a little, and then just kind of sideways. So we're waiting to see what these tech stocks are going to do, and I think that's going to write the tail of the tape here pretty quick. So as these come out, that's kind of the chart I'm watching for seeing changes. Okay, going to jump into my presentation from yesterday at the Chicago Money Show or Chicago Traders Expo, and I called it "Creating Powerful Charts." And I think one of the problems that we have is lots of people when they first start charting, they don't really know what they want, so they throw a whole bunch of indicators up, hoping to find something that clicks for them. And there's a reason for that. It's experimentation. You have to get comfortable, and some of the trades you start to put on. And I've probably went through 50 or 60 different checklists of things that I wanted to do. I'm just there. Uh, Different checklists to try and make a trade, and it seemed like, add this condition and add this condition and add this condition. But every time I added a condition, then it took longer and longer to actually make a trade because there was too many decisions. And by the time I finally got all of the signals lined up, then the trade had moved. So then you start taking indicators off and get down to a relatively simple core and start to work with that. And I think that's kind of where my trading's evolved to, where I just want a couple of things on the chart and then go in and look at the price action and deal with it from there. So anyway, one of the points I'd like to make here is, you can have nice, slow, long down trends, and they can stay like that for a while. You can have these up thrusts that just literally go straight up. You can have big parabolic moves like we had in the marijuana names or the gold names recently. You can have these, just top of the chart that just kind of sits here and does nothing all the way across. And, I think Amazon's a good example where we've just kind of been hovering for about a year and haven't really been able to break out to new highs. But the problem we have as investors is we don't know what to expect. And the bottom line is we need some sort of triggers to kind of push us in and push us out. So with that, we're going to work on this. You've already heard about all the stock charts issues. So what can charts tell you? I think one of the things they tell us is not so much how the management team's doing, but how investors think about how the management team is doing. And people with big money have to put it to work. And I had a friend who just took up joining. He moved his account from one brokerage firm to another. He said, "You know what, Greg? The first thing they bought was Microsoft." And that surprised him. And I'm like, well, it's the strongest stock in the market right now, so that shouldn't surprise you. And they bought Cisco. Yeah, that just broke out. And so, basic technical analysis, strong stocks work, and they continue to try and find that. So making sure that you have a method to find strong stocks is pretty important. And if he'd have picked some whatever obscure names or names that aren't doing as well, Freeport McMoran or Cat or something like that, where the charts haven't been stellar, that would be more of a surprise, right? But I have another friend who's got like 70 different things in his portfolio. Well, you might as well be the index, because the index, when you get that much diversification, you have nothing that can actually move the needle, and you're not in strong groups or weak groups, you're in every group. And so you're basically going to get what the index does. So, sell them all and just own one thing and just own the index. So anyway, charts have a huge number of choices. And what we want to narrow it down to is finding a couple. So I'm going to give you the reasons why we have it. And then learning when price is going to break down. And obviously that's harder to do because nobody wants to sell a big winner and nobody wants to sell a big loser. But the thing that we want to focus on is trying to use the charts to help show us that information. So here we have the Russell. Over 18 months, it's only up 0.78, and the S&P is up 11.67%. Now, the difference here is when we work through it, the Russell actually peaked out going up 80% off the February 2016 lows, and the S&P 500 is up 60% now. Interesting, though, the Russell made that high a year ago and really has underperformed since then. So unless you're aware of how the market is changing, you're thinking, I'm in a strong group, I'm in the small caps, and now the small caps have actually, dramatically underperformed since September of last year. They're down a good 20%, and the S&P 500 is obviously up a little bit from September of last year. So whenever you're talking about the stock market, you're talking about a relative performance. And I know some of this is basic for everybody, but it's not all bad to go back and just reground ourselves on what we're trying to do. But in this particular case, we see that the Russell, for the most part, has been going sideways. It had a 3-month period where it was up a little bit higher, but actually once it got up there, it just went sideways for 4 months and then gave it all back. So I always like to keep track of the Russell, and I get worried when the Russell underperforms. like it's doing now. And so we see the S&P 500 though still hitting new highs, and what that means is that the market is narrowing in breadth, and we have less and less stocks participating, but we still have the heavy lifting being done by the large caps. So with that, one of the things we always want to make sure we're working in is, if it's large caps trending up, we want to be in that. If it's small caps outperforming, we want to try and find some of those to have in our portfolio. And then once we decide on the cap size, then maybe we want to go over and look in the actual sectors that are moving the fastest and industry groups. So charts demonstrate relative strength. Both stocks are going higher. Which one is better to own? Electronic Arts and Alphabet. And here's Electronic Arts up 172% and Alphabet only up 83. Now, it's important to remember that the scale on the chart is adjusted so that the lowest point on the chart and the highest point on the chart fill the range. So how a software does that is it changes the scale. It squeezes it to get everything in there. And as you can see on Google here, the scale is arithmetic and this one is logarithmic. And what you're watching for is to see that compression in the charts type. So one of the things we want to focus on when we are investing is making sure that we're aware of how fast the stock is moving. And if the lowest price, so I just saw a chart this morning and the stock is going up in 50-cent increments on the scale on the right-hand side, and it's a 2-year chart. I'm thinking, like, why would you bother investing in that if the whole range on the chart is so slow that it's only moving 50 cents on a $30 stock? It's not moving fast enough to make any money. So you want to make sure that the stock has some torque. Commodity stocks move rapidly both ways. These big tech stocks have been rapidly moving one way. And then we have things, like CAT and Freeport McMoran and whatever that really have been harder to own. Okay, so charts can demonstrate relative strength. And the next point is that the previous chart here was set up so it's at September 21st, 2018, September 13th, 2018. And here we have it at the end of that. And you could see previously the trend line was starting to break on Electronic Arts. But this was a faster moving stock up and down. It dropped 50%, and Alphabet only dropped 21%. So we will, after we've made all that money, we have to find a way to sell those winners at the top. So one of the easiest things to be aware of, obviously, is the trend break. So you have a big trend here, and when that trend breaks, do you sell? And most people would have trouble selling, and for good reason. They've made so much money in the stock, they don't want to give it back too early. I would say that, in this relative strength trend here, it looks easy, but when all of a sudden this 6-month trend breaks, and then this 6-month trend breaks, that all of a sudden the stock falls apart. Well, if we just could run the trend across a bigger picture, and so that's why I think a weekly chart and just trying to use a nice long uptrend, that'll allow for the wiggles and try to keep you in the stock. The other thing to notice is that the PPO stayed above zero for the whole uptrend, and then when it started to break down in August of 2018, that was a pretty good clue that something was changing. So before I move on a little bit here, we're just going to take a quick spin out here for a commercial. We're doing some stuff on relative strength on Market Watchers Live, and hopefully you're able to catch that because I think it's pretty important. And again, I talked about it here in Chicago. So we'll roll the tape. Okay, so in this particular case, I've compared it against the S&P 500. And I think these two indicators are a good example of something you need on your chart. One is, how is it doing compared to the rest of the market? Because that's kind of important. If you're not outperforming the rest of the market, why not just buy the SPY? And then secondly, on the PPO, when it's below zero and your momentum is below zero, that's a pretty important place to be aware of. And so this chart is current up to Monday's close, or Monday almost the close, 355. And the point I want to emphasize here is when your momentum is negative, it's still difficult. Now you might get an uptrend from down below, and I don't mind being invested through that. The real thing to be watching for is when the signal reverts back over, why own it? Let somebody else have it. And so here's Electronic Arts with a scooter line instead, the SCTR. And again, that's a sports ranking for stocks where we take 6 different measurements. We calculate a value for a stock, and then we do the same for the next stock and the next stock. And then we rank them. When we say which stock has actually got the fastest price movement right now. And we push this scooter ranking out. And in general, I don't mind if it stays above 75 all the time. That's easy. If it stays above 50, at least you're in the top half of the bracket you're in. So if they're large caps and you're in the top half of the large caps, you're moving pretty good. If you're in the top half of the small caps, it's probably very aggressive both ways, but you're still doing okay. But the important thing to be aware of is, the scooter broke down a couple of times, and this probably would have whipped me out, quite frankly, having this big pullback in here. Now it got down just barely below this other support level and took off to the upside. So do you re-enter, and do you re-enter right here, or do you re-enter here? So the real question is, how much did you give back, and how late do you get back in? So that's one of the problems, especially when it's a relatively choppy PPO. But again, the stock was moving, you know, let's say in here it started to move up. Whoops, in here it started to move up, and you got most of this run. This is a pretty good run off $95 to 120. So I think most of us would be happy. But obviously, the big picture was a better run, and you want to try and find that. So now here the scooter ranking's clearly at 10, and there's no real reason to own the stock right away. So now here's Google, and what I want to point out, or Alphabet, what I want to point out is that it was roughly between 25 and 75, which means it's behaving on average with the rest of the stocks. It's sometimes a little faster, sometimes a little slower, but in general, Google was doing what the whole stock market was doing in the large cap space. And there were clearly outperformers above it, but there were a lot of companies that were worse. And right now, Google's in the bottom end of the range at 30%. And so no real reason to own it. Now, let's say the PPO starts to turn up here and Google starts to accelerate. Maybe you want to start to look at that trade. But again, the stock is one of the weaker performers here and hasn't been a full performer, a big performer for a long time. Now we compare that to NVIDIA, and this is an interesting chart. One of the things that's interesting about it is I spoke at the Toronto Money Show the previous year on this date, and the chart was lining up. And NVIDIA had been up here with the scooter ranking up in the top area for 3 years, and then it kind of started to give a heartbeat down here and then jumped back up and wandered sideways right in this area here. So at least, if nothing else, something in trend might be changing. And we can see that the PPO was very, very high. And, one of the things I talked about with a gentleman I met for one of our chart cons was that, the PPO, as long as it can be coasting down, but when it's at least still above 2 or 3%, you probably have some buffer there. But once it starts to really break down hard, you definitely want to be aware when it's starting to get weak. So this has been downtrending for almost 2 years, and you want to be aware of that potential. So this is cut off at September 13th. And here's what happened to NVIDIA. So remember, it wobbled and then went back up. Well, it took barely a couple of weeks, and when the whole market broke down, NVIDIA fell and really hasn't gotten off the ground yet, right? It was 280, went to 129, so a 60% drop. And then from that, and again, all the way to zero is 100% drop. So because of the exponential scale here, this 60% looks smaller, but it was obviously meaningful if it was in your account. So NVIDIA was behaving terribly and spent 6 or 7 months in the cellar, and it's now starting to pick back up, and we're seeing a lot of the semiconductors starting to do that. And we have a trend line that goes down here. Now, the real question for NVIDIA is, first of all, can it break this trend line? And second of all, can it get back up into positive territory and start to regain the momentum? And if that was the case, that would be very bullish. But at least it gives us 2 things to look for. One is a change in momentum trend, because momentum usually has to change first. If you're going down, you have to go from down to flat to up. You can't go from down to up. It needs time to make that transition, especially on a weekly chart. And we're starting to see the price action, even though it's going sideways, at least be roughly the same as the mid cap, or as the middle range in terms of the rest of the stocks in the market. So it's starting to get better. But just using these two indicators, this is falling below zero, and the scooter ranking, after being so strong, starting to break down hard, kind of giving you some clues. But a negative PPO was probably one of the biggest clues that you wanted to protect your profits. And again, just picking one stock like General Motors, this thing wasn't doing much on the way up anyway. I mean, this stock was going from $19 to 24, 20 to 27. I guess that's 30% move, so nothing to sneeze at. It's been a whole year going sideways. And in the meantime, the scooter ranking's falling. So you must remember in 2016, everything was going up and the stock was going sideways. So the scooter ranking is weakening because it's saying it's not behaving as good as the rest of the stocks. And then it's been sour for 2 years. Now it's bounced up and it got above 75 and it pulled back. And our PPO is right at zero. Well, if this could put in a wave and start to work higher, this might actually be a pretty good trade. And we'd want to see our scooter ranking get back above 70. If it's just going to oscillate in the middle, like kind of in here, there's no real value to jumping into this company. And the reason is because there's better alternatives out there, and we have good ways to find it. We do not need something that rolls over in terms of momentum and has no momentum up or down or starts to return to negative. That would be just bad. So here's another example of Micron. And what we see on Micron, this is going back to 2018, is a very clear uptrend, and all of a sudden it starts to break, and the scooter ranking's breaking with it. And even if you got out on this particular day, this is $43, $61, so you've already given back almost a third, and PPO is going below zero. It's been a big winner for you. You would have been in around $10 down here, $11, and all the way to 60. So 500% in 2 years. And now it's starting to break down and you're giving back quite a bit of it. Well, when the trend line broke, that's an issue, but you also see that the scooter ranking started to make new lows. And from what had been very strong to starting to wobble a lot, giving you clues that it's breaking down. But the big clue is all of a sudden your PPO starts to really break out of the kind of range it was in and starts to go negative. You have to take action on that. So here we have it. It eventually fell over 50%. And the downtrend that you had in momentum is now breaking and starting to turn to the upside. Momentum is going positive. The scooter ranking is back, returning. And the stock is breaking out, not quite to new one-year highs, but very close. And so with that, now you're seeing the trend change that you probably want to invest back in it. Now, some might say, well, Greg, I was going to get out at 43 and now I'm getting back in at 43. Yeah, what you don't know is how far down this was going to go. And some people think that, in really strong stocks, the pullback is about a 50 or 60%er. But I think the bigger issue is you want to try and find some reason to exit the stock after a 500% run. Do you really expect it to keep going? And in this case, the scooter was a pretty good clue that things were starting to change. And, whether you got out exactly on the scooter break or not, that's one thing. But what I don't have on here right now is the relative strength compared to the S&P 500. I think that's actually a better way, or one of the things to look at in terms of an exit signal. And in my book, Stock Charts for Dummies, what you'll see in there is 5 different ways to measure relative strength, and there's more examples in there. So again, one of the beauties about the scooter ranking system, and even if we went to look at stocks in London, we have no idea what stocks are, what the big name stocks are, what have been the fastest movers or whatever. And we could literally just click on the London Stock Exchange, pull up the scooter rankings, and it would immediately show us the strongest stocks in the group. So I think there's some real value there to be had, just using the scooter ranking to at least point you to the good stuff. But one of the things that we're seeing right now is all of these semiconductors have been on a huge run, and some would say, well, it's over because it's already run too far. We don't know that, but we do have all of these charts. Look at this 99.6 and going all the way down to 88 here. There's 25 stocks in here that have wonderful scooter rankings and are very powerful. So use that scooter ranking to at least direct you to strong stocks and try and find them. I think once you find the scooter rankings, the second thing you want to go look for is industries that have a lot of high scooter rankings. Gold would be one right now. And so you're starting to see those things. Then the second component of that is, you want your momentum to at least be sloping up, but maybe below zero, but your preference is it's sloping up, not sloping down, especially below zero. That's when really fast declines happen. So you want to get it, in this case, this is quite nice. It went above zero, pulled back, and didn't have a lot of downside pressure, and it looks like it wants to start going back up again. It would be breaking some sort of a downtrend here. And you could be in this stock uh, for years and have been up to 103, down to 54. Scooter ranking told you to get out. You were up, down, and again, I don't think it's the best sell signal, but it's a pretty good example of why um, when the stock starts to underperform, you want to avoid it. So it's underperforming for 2 years, and now the Scooter ranking is the highest level it's been in 18 months. So maybe it's time to get back into the stock, and that's what the momentum suggests. So just with those two indicators, that at least on a weekly chart, at least going to keep you on the right side of the events. I think one of the most important is knowing how a stock is doing compared to its peers. And to my knowledge, the Scooter ranking is the only thing that does that really well. It compares the price action of this stock to every other stock in the large cap group. And so that immediately focuses you on finding the best winners in the area. So try to use that to your advantage, try and find those stocks set up that way. And again, just how to find all our stuff. So the point is, on this presentation, it was relatively basic stuff, but it's good to return back to just saying I want a couple of indicators to get my trend right. And even if you're a day trader, go to those weekly charts. You might as well day trade stuff in uptrends and in big uptrends that you're starting to get the lift. So if you've got negative momentum and you're trying to buy a counter trend trade, very difficult. So, and again, hopefully the idea would be that with uh, with using the scooters and using the PPO, you're going to get a much smoother profile, and you won't have kind of all of those jagged outcrops and whatever. But in general, the view to the future looks pretty darn good. So, and then just highlighting the book. So I wanted to highlight just, returning back to basics, trying to get ready. What are you looking for? And make sure, if you're a TV follower and you see somebody mention a stock on TV, pull it up with your own technical indicators on it and just start to make some conscious choices. So some guy says, this stock's oversold and I think you should buy it, and you go look at it and it's like terrible, and you're thinking, why would I have to be the first one in? And um, when you have somebody who's trying to buy the lowest candle on the weekly chart, they're probably wrong. And the reason for that is it's not just the company might have great management, but you're actually trying to get a group of investors to start pushing the stock higher. And clearly, if it's on a down week and it's the lowest week of all, you're probably not there yet. And so let somebody else find and make the lows, and you can start to work with it when the momentum is improving rather than declining. Okay, so hopefully that just was a little refresh for everybody. I do want to just quickly jump back here and just go take one quick look at the indexes, because they opened lower this morning, and then they've been trying to rally throughout the day. For the S&P here, um, I'm missing something. July 24th. Yeah, that's all right. So we've been trying to rally here and keep this going, and we'll find out if we can actually, get through these prior highs from a couple of weeks ago, last week, I guess. And again, we're hovering right around this 3,000 level. So as we go through earnings, that's what I'm watching for. I want to see this start to break out and get going. Our PPO isn't very high, but it's okay. And again, on a weekly PPO, it's nice and high. It's up here around this 2% level, so still pretty good. But we don't want to see it roll over here as we're trying to break through prior highs. So with that, thanks everybody for joining me on the Market Buzz. Market Buzz airs live Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 Pacific.